Good afternoon, everybody, and welcome to MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. This is where we're going to do Strategy Now. Now, Strategy Now is a segment that we like to do where we talk about a variety of different either investment approaches or trading strategies, but just give you some context on how you can deploy your capital more effectively. And today what I want to do is take a look at diversification. We've talked about this in the past. We've heard pundits talk about this a ton. But with a move like we've seen today, based on some geopolitical news, a little bit of some currency action, how do you actually look at your portfolio and kind of determine, well, am I diversified, or am I really just putting different types of vehicles to work that are really correlated? So in other words, I could just trade in one of them and it's basically going to be the same amount of effect either up or down in what would be considered diversified assets. And how I want to look at this is take a look at this in context to the S&P 500. And what I mean by that is that I'm going to look at some ETFs that look at some what would be considered diversified asset classes. And specifically, I'm going to look at how we could invest in either Europe, Asia, Australia, just to name a few, with utilizing specific global ETFs that we've talked about and we talk about every day. And then really give you a breakdown of what's actually in those ETFs, why you're looking at those ETFs, when these ETFs really, or how these ETFs really move, and when you should be looking at adding either long or short or bullish or bearish exposure to these asset classes. And in the end, we're really going to understand, are they meeting the goal of diversification? And so what I want to do is just take a look at three ETFs. I want to look at EEM. This is the Emerging Markets ETF. I've talked about this one before. We're going to also talk about EFA. Again, another all-world in an ETF index. And then FEZ. This one looks really at Europe and the Euro Stoxx 50. Again, another ETF that we're going to take a look at. Now, before I get in there and take a look at what is going on with those ETFs, I wanted to break down these ETFs for you so you truly understand, first of all, what do they represent? Why, so that will give you a better understanding of why you're adding this exposure to your portfolio. And I'm going to also take a look at, are they truly correlated with the S&P 500? So, for example, take a look at EEM. EEM is right here. The countries that are composing this ETF are China. Stocks in China are 26% of this ETF EEM. Now, why can't we just go in and buy Chinese stocks? Well, first of all, because we don't have the ability to get exposure to Chinese markets here in the United States. So 26% of this particular ETF is Chinese stocks. 15% is South Korean stocks. So with the peninsula turmoil, or let's call it volatility, continuing to ratchet up, in other words, what we're hearing from North Korea, the continuation of hearing about some military exercises, whether it's on the North Korean border or whether it's in the Japanese Sea, we're hearing about it. So if you're looking for exposure, 15% of EEM stocks are South Korean. Taiwan, 12%. India, 9%. Brazil, 8%. South Africa, 7%. Mexico, 4%. Russia, 4%. And then you have other combinations, very small, 15%. That's a total of 100% of these ETFs is made up of this composition. Now, taking a look at EFA, which really is a similar ETF to EEM. Japan, though, is the main holding in Japanese stocks. So 26% of EFA is Japanese stocks. United Kingdom, so now we're in Europe, 18%. France, 10%. Germany, 9%. Switzerland, 9%. Australia, 7%. Hong Kong, 3%. Netherlands, 3%, and then other 7%. And then finally, we take a look at FEZ. Now, FEZ, the main component in this Euro Stoxx 50 is made up of French stocks. 36% of this ETF is French stocks. So, for example, if you started to get interested in getting some exposure into France because of the elections that are going on, whether it's bullish, bearish, or neutral, this ETF, 36% of the stocks in there are represented of French stocks. This could have been an interesting area to look at. Germany, 34%. So two countries basically make up 7% of all the 70% of all the stocks in FEZ. Then Spain, 11%. Netherlands, 10%. Italy, 5%. Belgium, 3%. Finland, 1%, and other 2%. So that's a total of 100%. The great part of looking at the composition of these global ETFs is twofold. One is you understand where your exposure risk is. If you start to see negative headlines from China, South Korea, or positive headlines for that matter, out of France, Germany, Japan, you're going to be able to anticipate potentially what could be potentially going on with these ETFs. Another thing that you can do is you can look at the IV ranks and really get an idea of what the options marketplace is anticipating for potential moves in these global ETFs. Why is that important? Well, use the option prices to give you a barometer of what the expectation of potential violent moves are. For example, EEM, the implied volatility rank is coming in at 16.5%. What is that telling you? Very low expectation of potential violent moves in EEM. And if you look at these stocks made up, there hasn't been a lot of move in China, even though China was down a little over 1.4% overnight last night. We'll see how it trades overnight tonight. EFA, though, implied volatility rank is at 46%. Why is that? Look at the exposure to Europe comparative to the EEM. Yes, 26% is Japan, but you have United Kingdom, France, and Germany. That's basically, you're looking at almost, 30 plus percent in 37% of this ETF just in these European underlyings. Plus, we had Japan. So with having France, United Kingdom had the Article 50 trigger over the last couple of weeks, Germany going to be having elections in June, there is a heightened sense of potential violent moves. IV rank of 46%. Once you get close to 50 and north of 50, in other words, higher 50, getting close to 100, heightened expectation. Then we look at FEZ. FEZ, 36% France, 34% Germany. IV rank of 46%. Makes sense. There's binary events. They both are having elections. France is currently in that election cycle. Germany is next. So you see that the implied volatility rank is higher, so there's a heightened expectation of potential violent moves in the underlying. One thing that's also notable is if you take a look at the correlation of an EFA or an EEM, they're very highly correlated to the S&Ps. Now, FEZ is also correlated, but a little bit less than the 70% correlation coefficient that we look for. It's more in the 40%. So very interesting breakdown here. Gives you an idea, though, that as you feel like you're diversified, you really don't understand what you're diversified in. In other words, for example, if you take a look at the action in EEM today, up 1.44%. Right? That's a decent pop in EEM, but their exposure to China is lagging the performance in EFA, which is up 2.64%, which has Japan, France, UK, and Germany, which are all trading up on today, especially France. Then you look at FEZ, up 5%. 36% of this ETF is exposed to France. So it's up $2 or 5.7%. So now you understand. Now you see from those composition makeups, first and foremost, if you were looking for exposure in those countries, these are vehicles that you can do it. You don't have to deal with the currency conversion risk if you wanted to actually, if you could, go in and trade those actual stocks on the French CAC or the FTSE in the UK or in the DAX in Germany or in the Shanghai Composite if you could, or Hong Kong Hang Seng, or trading in Japan. If you could trade in all of these different markets, if you could have the conversion done in the currency and do all of that through your brokerage firm, that'd be great. But that's a lot of work. And there are a lot of different factors that you're going to have to take into consideration, like currency slippage, pricing, all of those things. Here you use these vehicles and you can deploy this. And knowing that when you look at different ETFs, like for example, EEM and EFA, you know that basically as the S&Ps go, so do these two underlyings. Now, FEZ, not necessarily. Little less correlated to the S&P, so you're getting a little bit more of a diversification component there in your portfolio if you're looking at FEZ. So you're also looking at that from that perspective. That may be meeting your desired diversification. All right, folks, that is it for Strategy Now. Join me at 3:30 Eastern Time. I'm going to be doing Tech Talk. I'm going to look at charts and option pricing. I'm going to look at a couple stocks that are having earnings. We're getting into the heat of the teeth of this new earnings season. So join us, and we're going to start kicking it off today at 3:30 Eastern Time, 2:30 Central Time here at MarketStream.live. See you then.